Hi everyone, my name is Kritika and today I'll be talking about budgeting. So as an overview on what we will discuss today, we'll be talking about emotional spending, why is budgeting important, and how to create a budget. So first is emotional spending, which is the idea that our emotions and feelings can influence the way that we spend at any given moment. Usually it has a negative connotation, so the idea that um, all of our emotions can cause us to spend in a way that later we might regret buying something, and it can be a problem if you're not able to return it, especially, and cause even more stress. So it's this usually a negative feedback loop where these emotions come up, and then you make a purchase, and then you might not be able to afford it, and later it can create more stress, and it causes this like circular um, behavior pattern. Also, under the topic of emotional spending is just the recognition that everyday spending can quickly add up and become a source of stress for a lot of people. There's a lot of different things that can contribute to the stress. So, the idea that companies always have an incentive to encourage you to buy from them. The way that they get money is having people come to them and spend more money and buy from them. So, they will sort of do whatever they can to get you to purchase their products. You also may feel pressure to keep up with the spending habits and lifestyle of others, which is supernatural and happens to a lot of people. It's very common. It may be hard to say no to your children or family members who are living near you or with you. All of those things can influence how we emotionally spend. So, how do you recognize emotional spending? These questions might help you identify behavior patterns that can give you a sense of whether you spend emotionally or not. When you have extra money, do you spend it or save it? Do you frequently buy items you don't need or never use? Do you have trouble controlling your impulse to buy new things? These are all questions that, when you're answering and thinking about them, it might help you realize certain things. Also, as a note, this is absolutely not to say you should never buy items you like or you want, but it's simply just a self reflection on healthy spending habits. So we can sort of see what our behavior patterns are, so that when we get started with budgeting, you could just take into account how you usually spend. But before we start, we're just going to talk a little bit more about emotional spending and what we can do to control it. So, if this is something that happens to you frequently, asking yourself the following questions might help. Do I need this item? Can I afford this item? Why am I buying this item? Is it something I will use? Is it something that I want to buy? All of those can help. Also, identifying common emotional threads can help you regain control. So, do you tend to spend more when you're upset or sad? And knowing that can then help you maybe find something else to do when you're upset or sad, to just be aware that that's how you spend your money, and take that into account and find other ways to deal with it. What else can you do to control your spending? You can try to avoid signing up for mass mailing lists. That could be helpful. I'm the type of person who gets absorbed by all these emails that I receive that are like, get a special deal on this, or spend $50 and get $30 off, all of those different kinds of deals. I have a tendency to just read through all of them. And so, something that I've been doing this past year that's very helpful is, when you type in your email into any sort of purchase or any website that asks for it, there's usually two boxes, and one of the boxes will say, I agree to your terms and services, and I'll check that one. But there's a second box that says, I'd like to sign up for your mailing list. I'd like to receive emails about offers and deals. And I won't check that one because I know that it encourages unhealthy spending habits. So I just make sure that that checkbox is not checked, so that I don't receive all those emails. So that's something that's been super helpful for me, once I've been more aware of that. Also, we can keep a separate fund for fun spending. So if you know that you are going to be spending a certain amount, on a certain, you like to spend on certain things, you can try to make a separate fund to account for that. you like to go bowling every Thursdays, for example, with your friends, just putting aside money for anything fun that comes up, any sort of entertainment. There's a bunch of good movies coming up in the summer. All of those things we can account for ahead of time. Lastly, we can distract yourself with other activities before committing to buying something you don't need. So if I ever get the urge to just spend a lot of money on something at a certain moment because I'm feeling overwhelmed, I'll take a walk or cook something, and that just gives some space and it can help distract me from buying something that I don't necessarily want or need. So taking a little bit of space, taking an hour or two to think about it, and then coming back might give you a different perspective. A budget is a plan based on your income and savings to meet your financial goals. So, how do we budget? There's three steps to budgeting broadly. The first is to evaluate your expenses. So you want to make sure that your total monthly income is greater than your expenses because you never really want to spend a lot more than what you're making each month because then it can lead to more debt and additional stress. Second is practicing healthy savings. So keeping aside extra money for emergencies can be so helpful. So if anything comes up, like in the last minute you get a flat tire or you need to buy an umbrella, things like that, all of these emergency things that it's hard to sort of plan for. Keeping a fund for that you can draw out of so it doesn't feel overwhelming at the moment can be very helpful. Third is plan ahead for recurring expenses. So planning ahead for bills that you know you're going to have to pay each month. So phone bills, rent, groceries, things like that that are consistent and come up always. Putting aside money ahead of time for all of that can be very helpful. So usually when budgeting, people use the 50-30-20 plan. And so what this plan says is if we take our total monthly income, so take a minute right now to write down your total monthly income or an estimate of what it is. What this plan says is 50% of the total monthly income should be spent on necessities, 30% on discretionary spending, and 20% on savings. So let's go back to the 50%, the 50% on necessities. This includes things like groceries, utility bills, house payments, transportation bills, and insurance. So things that you know you need every month. So transportation, like if you're getting to work, taking the subway or the bus or the train every day, that amount, whatever it adds up to, keeping that money aside. Your apartment rent, your house mortgage payments, all of that count under necessities. Then we have 30% on discretionary spending. And this is all the fun stuff, things that we want. So gifts, any trips or vacations you're going on with your family, or if you have family that lives a little bit far away and you need to go visit them, all of that. Dinner, so if you ever go out to dinner with your family or with friends, entertainment, so if you go see a movie, go to an arcade, bowling alley, whatever it is, whatever entertainment, all of that counts under discretionary spending. Then we have 20% on savings. So this 20%, we just put it away for the future so that we can have it for things like emergencies, have it for retirement savings, everything, all the savings are 20%. So we're going to do a quick example now. So let's say that your after-tax income is $6,000. How would you use the 50-30-20 rule? And feel free to pause this video for a second and do the math yourself, and then I'll go over the answers. All right, so if you paused and calculated it yourself, you should have gotten that 50% or $3,000 should be spent on necessities each month. And then 30% should be spent or $1,800 on discretionary spending. And then 20% or $1,200 on savings. Why is budgeting important? So we just talked about how to budget, but now we're going to talk about why it matters. So budgeting affects your financial well-being. During emergencies, having an emergency fund you can use can prevent the buildup of debt. Following a budget each month can help you keep track of debts and loans in order to pay them off. Budgets change depending on your age, needs, and circumstances, and budgets can alleviate stress and help you stay organized before your next paycheck. So, like we talked about earlier, having an emergency fund can relieve a lot of stress if anything comes up. And following a budget can be very helpful if you're in debt and you've taken out any loans, just so you can keep track of how much you're spending each month so that you can account for that and make sure you pay it off in time. And budgets change all the time based on your needs, your circumstances, if you have more family dependent on you, if you have less family dependent on you, what your age is, where you're working at the time, even what month it is. If there's a month where your children have birthdays and you have to account for gifts for that experience, like um, any of that can change a budget. And so it's important to keep updating it and make sure you're on track. And budgeting in general can just help with organization, help relieve stress. So we're going to do a quick budgeting activity. So we're going to make a list of our budget goals. So if you have a chance, now is a good time to grab some pens and some paper. And once you've gotten that and you have that ready to go, we're just going to write down your budgeting goals. And some questions that might help with that, because it's sort of a broad question to write down your goals, are there any purchases you want to save up for? Any debts that need to be prioritized? What is most important to you right now in terms of budgeting? So are you trying to pay off a loan? Are you trying to save for school? And then what would you like to focus on short-term or long-term budget goals? Which one and what specifically? All of those can help with this. So we'll take a moment here. Feel free to pause. Okay, so everyone should have had a list, and hopefully that helps with making a budget. Right now, we're going to do another quick activity and take what we have with our goals and try to turn them into actual estimates and lists. So we have our goals, and now what we're going to do is put those goals into concrete items. So start by making 2 sections on your paper. On the left, write down necessary items, and on the right, write down nice items. So necessary items are items you need and especially value every month. And nice items are items you've been wanting and would enjoy having. So let's take a second to just make a list, write down everything that comes to mind for both of these. Feel free to pause here. So once you have that list of necessary items and nice items, what we're going to do next is try to estimate the cost of each. Everything you've written down, just put like sort of a ballpark number. So necessary items, groceries, maybe like $150 or whatever it's costing you per month, per week, and put that together in terms of each month, how much you think it would cost. So we're going to do that for necessary items and nice items. And then at the top of the page, let's put down our monthly income. So how much approximately you're making each month. So now that we have all of these numbers on the page, feel free to pause the video at any point again to sort of catch up with this. What we're going to do is we're going to take the monthly income, subtract the necessary items, and see how much you have left. Based on the amount that you have left, you can allocate it into savings and nice items and control that. In the end, we want to try to make sure we're following that 50-30-20 ratio. So based on your monthly income, try to divide it into those categories and see if it matches up. So once you've had a chance to look at the 50-30-20 and seeing how much money you have left after you've subtracted your necessary items and making sure that you're accounting for savings, we can use the goals that we wrote down in activity 1 to see if we're on track to achieving those goals based on this basic budget plan. That's it for